Hey traders, it is the 13th of June and today we have a huge news day coming in the currency market. It is the federal fund rate announcement where we're expected to see a dollar rate increase up to an expected 2%, so just a slight increase, but nonetheless a further increase in interest rates in the US dollar. So what I've got here is the dollar index chart, and what we've highlighted here in the green circles are each time the dollar index or the dollar index, the US have increased federal rates. So obviously I've highlighted today's here, and this is in expectation that they're going to raise rates. So what happened over here, you can see the market sold off. Here there was a little bit of a rally, but then sold off a few days later. Again here we've seen it sell off, and again here we've seen it sell off. But leading up to each one, you'll notice that the market has rallied. And what you're probably finding is this is the market pricing in a rate rise, followed then by waiting for the next market movement, which is why usually we're probably seeing a decline in dollar prices after the rate rise, because it's already priced in. So what does this mean to the charts for us and our trades that are currently running? Well, here in the Lifestyle Traders Club, what have we got running? Well, we're currently long Aussie dollar. We've got 3 positions running on Aussie dollar. First one from down here, we've got a COT Extreme. Second one through here, and third one on a retest of this level, which is now back in profit. We did take partial profits on all 3 trades, but what we're looking for now is a break of this CTL, short-term CTL within the channel, and for it to push up. We are expecting to see Aussie dollar at least reach 78, maybe even up to 8,000. based on commercial buying of this market. Now, more importantly, where do we expect to see the euro? Well, the euro, what we're seeing is we're long euro from down here. We've also got another trade in through here. And we took a trade last Friday through here, which we banked on Monday. I think it was Monday afternoon. We took half of our profits off at 2% up, so we've got a free trade now running on our second position, which is now slightly in profit yet again. But what we're expecting to see with the euro is a push up towards 119.80, as a maximum maybe 120.80, which is going to be around this key level here. You can see this point here and this structure point here, and we're trading this as a head and shoulders up into what could be the right shoulder to then sell off. And if I just bring in the dollar index on another chart here, so what we've got here is we've got the euro, excuse me, let's take this back to the dollar index. We'll go to the daily chart, and over here on the left chart I'll take that back to the euro dollar that we were looking at. So let's just zoom these charts in a little bit so you can see exactly what we're talking about. So if you look at the left chart, you can see the market rallies up, pulls back, comes down into this structure point, rallies up again, comes back down into the same structure point, and now what we're looking for is that right shoulder. So over on the dollar index chart, this is the one on the right, what we're seeing is the market comes down, it rallies up, forms an inverted head, coming back up. Now you see a little stutter and stall. Now potentially we'll see this sell off back down in towards the 91.50. In order to get to 91.50, it's going to have to break through this little minor support level at 93.20, and 91.50, 92 is potentially where we might see the dollar strength resume again. We may get a deeper pullback into 90.50, but if I'm honest, I'm going to be taking all my money off euro longs and Aussie longs, etc. if the dollar index gets down to 90.50. I don't want to potentially try and hold for the holy grail and get that whole run. I'll be happy with my profits there. I've made exceptional amount of profit at that point. So this is how we're trading it, and we'll be looking to take advantage of that next leg down and then looking for the next movement up. So if you're not in those trades yet, there's potential room at least for best part of 230 points, potentially 300 points on euro to the upside. Again, it could potentially run up to 22, 26, but I'm not going to risk breaking through this level. If it does break through this level, I'll look on an intraday time basis to take it long through that point. Dollar yen, this was running pretty close into our technical area here. We were looking to short. Again, it's not. It's one of those charts that has been a little bit annoying. We've taken quite a few trades on this market, some of which have paid off handsomely, and others which have just been rather irritating and cost us money as well. So, you know, like any good trader should be honest, and you know, it's not all roses and sunshine out there. You're going to take losses, and dollar yen's been one of those charts that technically it keeps setting up, and you would expect that we've made decent money on it, but unfortunately it's one of those that's actually been costing us money. But you know, you have to be diligent to your rules and stick to your rules and keep trading it when necessary, and we've been doing that unfortunately every now and then. And more recently it's been more of the time that they've been losing trades. But one thing we do know is you stick to your rules and you stay consistent, you're one step closer to that next winning trade. So don't be despondent on a market that isn't paying you eventually. If you've done your testing, you know your results, you know that market will then pay you back. So dollar yen, this is potentially looking for 108.50s and then a breakthrough 108.50s, and we should potentially then see 105s and 102s. So we'll be looking for that next move down. Swissy, this is a market we've got quite a few trades in actually. We took our COT signal from up here, you can see it's highlighted. We took an add-in trade from this retest of this zone here that we've got highlighted on this retracement here. And that's it. We've been letting this one run because the cyclical patterns on the intraday basis haven't, or smaller time frames, haven't been great. It's been moving exactly how we'd like it, but unfortunately the cyclical patterns aren't there to trade, so there's been nothing else for us to add in on this market. We are looking for 97.28 as a target base. We have taken profits off coming down from our first two trades, so we are running at risk free on this market right now. Cable, well, cable, interestingly, this is one we're looking for slight gains on cable, at least to maybe 136, potentially 138, and then we'll be looking to short this market. It's not a trade I want to be buying, if I'm brutally honest, so I'm going to sit out of this one. The data out of sterling hasn't been great today. We hit Monday was a huge miss on data, and yesterday was as expected. So we also have obviously the Brexit farce looming over the economy. What's going to happen? So I think the implications there are obviously going to be more detrimental than beneficial to this to the strength of this market at present, until we get some better news in relation to this market. Other markets of interest, obviously we're going to look at gold, and then that'll be it for today's video. What we can see from gold is we've got a nice trap range between 1367 and around 1304. If we zoom out a little bit, you'll see we've got this trend line sitting quite nicely that the market's respecting. The support level here at 1304 that the market's respecting. You can see here gold sat within that. Look, let me just remove that. You can see gold is sat now within this little trap zone, so there's nothing you can do with it right now. However, due to equity prices or index prices, the way I'm seeing this market is a move to the upside, so I'm looking for a break of 1307, depending on trading style, maybe a retest of 1307, target 1350 to 1357, and then any break above 1366 we should see the market move considerably higher. So gold is a long-term buy for me. If we fall through this trend line, then obviously 1250, 1245 is an area where I'll be looking to buy, and again I'll still be looking for long-term holds on gold. Okay, that's it from today's video. I want to keep it nice, short, sweet and snappy. If you did enjoy our analysis and you like what you see, then please let us know, and a very simple way of doing that is hitting like on this video, share it with any fellow traders, and subscribe. You know, by subscribing it's free. What this means is anytime we upload a video, it's going to come straight to your inbox and there's no need to keep checking the channel. Alternatively, if you want to be part of our live traders club, it's very simple. Go to our website www.tradeandtrain.com, click join club, and you can join us for 24/7 chart analysis, trading ideas, and up to the moment, news coming through to you wherever you are, regardless of whether you're at work, on holiday, asleep, in the gym. You'll be kept in the loop 24/7. Okay, traders, have a great day. Be good, stay disciplined through FOMC, and more videos will be coming next week.